Okay, well, Mark, hey, we're back.
We're
I
live.
guess
We're
let's,
back.
maybe for introductory purposes again, I'm Mike Jacobson. I'm President and CEO of Nebraska Land National Bank.
Mark Workmeister, Certified Financial Planner and partner with Professional Financial Advisors. And we're here in the boardroom again, different time of day. It's 7:30 the last couple weeks, 9:30 today. Give us time to wake up, get our thoughts together a little bit. Just a few disclosures. I think all of our disclosures are able to be read. Once again, there's a bunch of them. The main thing to know is this is not personal investment advice. This is general. We're just chatting about everything's going on, what's relevant. And we're not affiliated, so Nebraska Land National Bank and Professional Financial Advisors. I'm a tenant in the building. My office is about 40 feet from where we're sitting right now, but we're not actually tied together.
All right, good to have that out of the way. Well, we're going to kind of divide this segment in half today, and I'm going to kind of lead it off and talk a little bit about the PPP program. And so we continue to get more guidance, and we forged ahead, and I want to give everybody a little bit of an update on where the PPP program is. The new sole proprietorship piece has come out. I want to give you a little information on that, and then I'm going to turn it over to Mark, and Mark's going to talk a little bit about the stock market and the questions that he's been getting and we've been getting on what's happened with the stock market. Should we invest? Should we not invest? And so Mark's got some great advice, I think, and some thoughts that he can share with regard to the market. So first with PPP. Okay, it's a Paycheck Protection Program. It started out where this was set up for small businesses who employ less than 500 employees. And this is really intended as a way for them to be able to continue to pay their employees, keep them employed, and cover some non-employee expenses such as rent, interest on loans that they had taken out prior to February 15th, and utilities. So those are the qualified expenses for PPP. We were inundated with applications. The application process began a week ago, last Friday night at midnight. It had a lot of fits and starts trying to get started, but we're also talking about $340 billion being sent out under this program. So has it been cumbersome? Yes. Has it worked? Yeah, we believe it has. And I would just tell you that although on any government program it's going to have its problems, but I think all in all it's gone fairly smoothly. The frustration we've had as lenders, as banks, is the guidance has been slow to come out, and so you get a little concerned about making an unsecured loan for 2 years at a 1% interest rate with no personal guarantees. You kind of like to make sure you understand all the rules before you let that money go out the door. And so that's why the banks have been fairly cautious about making sure they understood the rules before they went forward. I want to tell you that at this point, we had lenders working 24/7. Basically on that Friday night, they worked the entire first weekend, sent a substantial number of applications through. We finally were waiting for more guidance on exactly what the loan terms were going to be, and ultimately got guidance that said we had to close those loans and fund them within 10 days of getting the guidance, or within 10 days of getting the application approved. So for us, those loans that got approved a week ago, last Saturday, they had to be closed by last Monday. So this past Monday, we did close almost $20 million worth of dollar volume, probably roughly 100 applications that were closed on Monday. We closed another substantial number of loans yesterday. We'll have a significant amount of closings today, tomorrow, and Friday. And yes, we are still taking new applications at this point. Again, keeping in mind how the PPP program works, if you were an employer and you meet all the other caveats of a small business, basically what you're doing is you're able to borrow 2.5 times a month's payroll. So take 1 month's payroll expense, and anybody making over 100,000 would be capped at 100,000. Take that number times 2.5 times. That's essentially what you can qualify for on a loan. Then that loan, once you take it out, can be fully forgiven by the government. But for it to be fully forgiven, you're required then, from the time you get the money, you have 8 weeks to make sure that you have employed the same number of average employees, FTEs, as you had either from January 1st through February 29th of 2020, or that they go back to another measurement period of February 15th, 2019 through June 30th, 2019. So you can pick those two gauges where you have the least number of employees and what your payroll was at that time. You're required to have at least that average number of employees employed from the time you get your PPP loan for that ensuing 8-week period of time, and that you expend at least as much money on those employees as you did in wages during that time. If you do that, then that loan will be fully forgiven and you don't pay any of it back. If you fail to meet that threshold, then to the extent that you don't meet that threshold, you would have to pay that portion of the loan back. You're also allowed then to pay whatever you had for employment. You are able to pay up to 25% of the total loan can be used for other expenses such as interest on your loan, rent payments, and utilities. So the bank, we will be tracking all that information for you. That's one of the things that we did. There are a lot of banks out there who just put up an application on their website and said, have at it. We didn't do that. What we did was we worked with all of our clients who applied through us. We made sure that they qualified. We made sure that they understood. We understood that they knew what qualified, and then we're working with them by segregating the funds and helping them through making sure that they hit all the thresholds, so this loan will indeed be fully forgiven by June 30. There's also a requirement that by June 30, if you weren't fully employed on average employees, you need to be there by June 30, have at least the same number of employees on board as you had before. Effectively, what the government's doing is they're trying to avoid paying unemployment, and they want to keep people employed. And so the PPP program is giving the money to the employer to keep their employees employed rather than having them go on unemployment. That's essentially what this program is doing, and it's allowing them to spend another 25% above that to offset some other overhead expenses that are specific. So bottom line, that's the program, that's how it's worked. At this point, we'll probably do over.
Questions.
You have a couple questions? All right.
First, and you may have addressed this, are the loans government guaranteed? And then second, are the loans granted to persons outside a bank's usual market areas?
Actually, I guess if I understand the question, anyone who comes into the bank's market area, obviously we focused first and foremost on our existing customers. We have processed a large number of applications for non-customers. That gets a little more treacherous because we have to do all of the federally required guidelines of know your customer, what we call BSA, where we have to get your driver's license and all that information. For an existing customer, we already have that. So with COVID out there, it makes it a little more cumbersome, but we're getting it done. So yes, you could live outside of our bank trade area, and if we are comfortable that you would qualify as a customer, then we have processed a number of those applications. This is designed, it's a loan program that's designed to be fully forgiven if you meet the requirements. Again, that's why we don't just throw an application out on our website. That's why we can consult with every customer who applies to make sure that they understand the program, so that we can get them to the point of full forgiveness on the back end of this program, which will be around the 30th of June. So good questions.
And on the bank's end, it is guaranteed by the government if they qualify, correct? So,
Exactly.
So if somebody defaults, I mean, it's more the government issue than the bank
It
issue,
is.
assuming that you do all the legwork and do it correctly.
Correct. And I would also caution those people that would go out and take this loan and fabricate their numbers. Do not mess with the federal government, okay? The reason that this is worked through the SBA is you can't bankrupt your way out of this loan. If the loan gets made and you don't comply with the terms of the loan, and the bank has to exercise on its guarantee from the government to get paid, the government's going to track you down the rest of your life. And when I mean the rest of your life, if you ever have a tax refund, they're going to take that tax refund to get this loan repaid. If they determine that you committed fraud, they will criminally prosecute you. So I would just advise people, don't look at this as a way I could just throw a bunch of numbers together. And that's why we're very careful, not only for the bank to make sure our guarantee is upheld, but also to make sure the people that are applying through us don't wind up in jail because they did it wrong. So we feel that it's important to work one-on-one with a lender and not just get on some bank's website and hope to apply, because a lot of them have gone that route, and I'm very fearful that there'll be some very bad outcomes down the road where these will not be fully forgiven loans and essentially grants. They will be a large payback period because they were done wrong.
Right.
As of last Friday, sole proprietors were eligible. There have been a lot of questions on who's a sole proprietor. Again, you've got to be a small business. You got to be under 500 employees. And some have asked, do farmers, do they qualify? Well, under the regular PPP program, a farmer could qualify if they had a payroll. They would have to meet the same guidelines as any other small business would. When it comes to sole proprietorships, a sole proprietor would be someone who files a Schedule C on their income tax return. Most farmers file a Schedule F. They would not qualify if all they file is a Schedule F. If, however, you file a Schedule C and you're a farmer, what would be the circumstances when that would happen? Well, number one, if you ran a trucking business and you were operating a trucking business and you had a Schedule C, or you were doing custom farming and you filed a Schedule C, go to line 31 on your Schedule C. So anybody who's a sole proprietor saying, hey, I might want to apply for this program, do I qualify? Real simple. Get your 2019 tax return, not your 18, your 2019 tax return that was filed this year. If you haven't filed it yet, you need to file it because it's the 19 tax return that they're going to use. You take the 2019 tax return, go to your Schedule C to line 31. That's the number. That's the number you qualify for. What is line 31? Line 31 is gross income, less expenses, and the expenses include depreciation expense. So if you have heavy depreciation expense and you pounded down your gross profit or your net profit on your Schedule C, then you've reduced the amount that you're going to be eligible for.
Right.
So it's all circles around Schedule C. If that number is 0 or negative, you don't qualify. If it's a positive number, then that's the number you would qualify for. Pretty simple process from that standpoint. I would say a lot of businesses, there's a lot of realtors, there are a lot of hairdressers and other businesses that are sole proprietors. Look at your Schedule C, see what that number is. If you qualify, get in and get an application done. I would also remind you, $340 billion was allocated to this program. The Congress is working on a companion program. A lot of politics involved on whether or not they're going to be able to add another $250 billion to it. The expectation is that the $340 billion will run out this week. It's very unlikely that by next Monday that there'll be any money left in the program unless Congress adds more money to that program. So if you do qualify and you're interested, you need to be getting your application together very quickly and getting that in so that it can get processed. And keep in mind, under the regular PPP program, we need a lot of payroll information and tax returns. So it's not something that's easily done in a few minutes. So be prepared for that. But otherwise, I would just tell you, I'm very proud of our lending staff. I really want to call out Ty Lucas, who is our Chief Lending Officer. Ty has really led the effort here. Krista Hess, our Chief Credit Officer, has worked very closely with Ty and coordinated the processing side of this. I look throughout the bank. It's really taxed all of our resources right now, and that our lenders have been very busy pulling applications together, gathering the information, qualifying the customers, and now putting together loan closing documents. Our loan processing area has been busy with document review. Our loan administration area has been busy putting these all on the books and getting them funded. Our new accounts area has been busy opening new accounts to be able to fund these into those new accounts so that we can monitor and have the background that we need to get the loan forgiven. So it's worked very, very seamlessly. Very proud of our team and what they've gotten done. By the time we get all done, we would expect we'll be well north of $50 million in fundings. That's new money going into our markets. So again, great program.
Okay, a couple additional questions.
Oh, good. Questions.
I'll address these after too, if you want to keep it brief. But one is, I will pay Nebraska quarterly taxes 941N and UI11 on April 30th. Will that total amount qualify? And then the second part is, does rent, lease on equipment we use on a daily basis qualify?
Well, on the first one, I'm not sure that isn't really something that doesn't flow into the equation. So we're really just looking at payroll and then state payroll expenses and state taxes, local taxes, and then and you can also include the cost of sick leave and benefits, insurance. You're not able to include any federal tax payments as part of that. So I would say under that scenario, no, 941s don't really play into this. What we're really looking at, PPP, is really tied to your payroll, actually to the dollars you pay your employees, and the state and local taxes you pay, health insurance, benefits, 401k. Those are the numbers that would go into the equation to determine what you qualify for. And there was another question too with that.
Does rent, lease on equipment we use on a daily basis?
Yes, a rent would be part of that non-payroll expense. The rent numbers can't exceed 25% of the total payments that get made with payroll, but that's the kicker. You're able to get some of that included. Okay, any other questions on PPP? All right, well, I think I've probably used all of my time and then some, so I'm going to turn it over to Mark and talk to us a little bit about the stock market.
Yeah, so and you said that money's still there for people on PPP as of now?
As of now. As of now.
Yeah, because it sounds like to me that the government at least sounds like they want to hold some bullets in the chamber because we're not through this thing yet.
Right.
So I kind of get the sense that they're not willing to put more resources towards some of this until we see how this plays out. And that kind of leads into what I'm
And how much money
talking about.
does the Kennedy Center really need?
Yeah, that's right. Yeah, where's the pork barrel stuff here on this next bill? It kind of leads me into my next, topic about the market. Everybody, when the market was down 30%, top to bottom, it dropped 34% from February basically to the end of March. And everybody at that time was telling me, well, there was a few that were waiting to invest, but mostly people were saying, well, there's no end in sight. So we're just going to sit tight. We're going to wait because obviously the government doesn't know how to control this, and there's so many unknowns. This thing's going to keep dropping. And then on March 24th, we've started back up, and we've actually made another 25% back. And now the responses I'm getting is, well, this thing's over. The market's going up. We need to get in because we don't want to miss the bottom. So, I think the first step people need to ask is when they're thinking about putting into the market, do you really need to time the bottom exactly? Because I think there's some numbers here that BlackRock, a company that iShares, they have a lot of money, managed money. They put out some numbers on market bottoms that I thought were pretty interesting, just from a timing standpoint. If you time the market bottom exactly, the average 1-year return over the last 100 years is about 35%. So if you time it exactly, you're going to make 35% on that dollar. But even if you miss the bottom, so let's say you're 2 weeks early or 2 weeks late, the average return is still 25%. And that's, that gives you 14, basically 28 days on each side of the actual market bottom. So I think people need to be less concerned with where is the bottom and less concerned with short-term investments. Most of us aren't speculators. I know there's probably some out there. That's not what we really deal with. Being a speculator and being a short-term trader that's really a full-time job if you want to do it well. You have to have all the numbers. You have to be dialed in all the time. For the long-term investor where you're not dialed into the underlying numbers every single day, does it really matter if you're going to invest on March 24th or April 15th over the next 10 years? I would say a little bit. Your average rate of return maybe drops if you miss that 10%, but 10% over a 10-year average still is pretty minute. So the answer is it a good time to get in the market? If you're a long-term investor, then absolutely it's a good time to get in the market. And that's not saying that the market won't go back down. A lot of the things I've read, I know some of the big banks, it's kind of ironic. They came out and they basically said the bottom's in. We think we could still end positive by the end of the year. And then the market immediately went down after those reports came down. It's going back down today. And the good news is we finally established a little bit of a trading range. So, for about 3 weeks, the market was just down every single day. And then when the recovery started, it was up almost every single day. And now it's returning, even though it doesn't seem like it, it's returning to more of a normal scenario where it's up, it's down, it's up, it's down. The volatility is still really high, but it seems that the government program, at least in the bond market, has really stabilized things. So my thought is on the long-term investor, it's still a great time to get in. Those numbers, some of these numbers we'll post on our website too. I just think it sheds a little light on it. Back to the long-term investor thing. Sometimes people worry about, well, am I going to lose it all? I don't want my 401k. Why would I put in a 401k? I lost 20% this year. The longer you own your stocks, the less risk there actually is. On a 10-year program, the odds of losing money is less than 5% if you just buy into the S&P 500. And that goes back again 100 years. If you invest even 5 years, you have a 90% chance of coming out ahead of where you started. And so don't look at your portfolio as or whatever you're investing in, if it's a single stock or an ETF or a mutual fund, don't look at it as, am I going to make money over the next 3 months? Try and look out a year from now and say, once this is all over, where's this position going to be at? So as it pertains to should I invest money, that's kind of always my thought. If you're a long-term investor, now's a better time than normal because of valuations. But still, it's always a good time because if you look at the 10 years, like I said, there's really nothing out there that's going to give you that rate of return over a 10-year period right now without taking substantial risk.
And Mark, to that point, it seems interesting to me that it gets back to a little bit of what you talked about last week. First of all, you got to determine what do you need for your short-term funds? What do you need for liquidity?
Right.
And so how much do you need to have in short-term, say, short-term CDs, money market accounts, savings accounts, checking account, and then how much do you have available for long-term investing? And once you determine the number for long-term investing, then really it's not a matter of when you get in the market, it's really a matter of how long you're in the market, isn't it?
Right, and that kind of goes back to my...
We have a little weak internet connection, I think. So Mark, I'm going to go back to the question I just posed to you, which was, it seems to me that you've got people that need to really first identify how much short-term liquidity do they need, and once they've determined that and know what they've got for the long-term investment, it seems to me it's not a matter of when you invest in the stock market, it's a matter of how long are you in the market.
Yeah, I mean, in the grand scheme of things, like I was saying, if you're going to be invested in 10 years, for 10 years, does the exact day you invest really matter? To a certain point, yes, but long-term returns, no. I mean, we're talking fractions of a percentages versus waiting, missing a 20% rally, and then, slowly trickling it in. If you're a long-term investor, you can't let the day-to-day movements, basically you can't let fear drive your investment decisions. Back to your point, it basically what's your investment plan. You have to have your short-term needs covered. We talked about this last week. You have to have your emergency fund. And then after that, you really need to think about how much risk you want to take. Not everybody's going to be able to put their money into a mutual fund, a stock, and just let it ride. I mean, the best investment plan is actually one that you can follow. So even though I may tell you the best investment plan for you is a diversified portfolio of index funds that are all in stocks across many different regions, markets, as soon as it loses 20%, you may be out the door. So that's too much risk for that person. So you still have to design it to you, and then you can start mixing in alternative strategies. Bonds is always the popular one. If it's bonds, if it's precious metals, if it's some sort of hedging or more active trend following program, those are all things that you can do to diversify to lower your risk. As it pertains just to the stock market, right now, and there's still really easy ways to get that money invested, even if you don't want to go into the market today. We've put a lot of limit orders in over the last 2 months, and all that is let's say you want to buy an individual stock and it's $100 a share. We can take all that money and we'll say, okay, if it drops to 95 a share, we want to buy it. If we want to drop it to 90 a share, we want to buy it. So basically you're setting up an automatic buy signal at whatever price you feel comfortable with. You can do that with stocks. You can do that with ETFs that are, follow a specific market. Maybe you just want to buy the S&P 500. Maybe you want to buy, the emerging market, just the whole thing. So it's an easy way to diversify, but also set your entry point automatically so you don't have to worry about, every day checking in. What happens too often is people want to send us money and they say, okay, the market's down today, I want to get in. Well, we don't even have an account open. We don't have any money in the account. So by the time they get it funded, by the time they get the money in the account, the market's moved one direction or the other significantly. And so the easiest way to do it is get the money in the account, sit it in a money market, and put your orders in, and then just let it fill at whatever price you're comfortable with. And most people don't even really need to do that. They can just do the market orders, get in, and look 3 years out. But it still goes back to the investment plan. I think as far as people that have investments right now, the biggest thing is to know what you own. Now's a great time. Maybe you have a taxable account and you have an investment you don't really like, but over the last 10 years, there's been so many capital gains that you never wanted to sell it. Now's a good time. You might be able to sell that investment and go into a cheaper solution. I think back 10, 15 years ago, and like the actively managed mutual funds with the higher fees were much more common. Well, maybe you have some of those, but you didn't want to sell because of capital gains. Now's a good time to get out of those. Maybe you can swap into a cheaper index fund and not have such to tax it because the markets have fallen. So there's still a lot of opportunity, but overall it still comes back. Now is a great time. Figure out, do you even have an investment plan? The investment plan would specify how much is short term, how much is intermediate term, how much risk am I taking, where's all those assets going. If you don't have one, now's a good time to look at it, because really we've had a real live stress test. So a lot of people, when the markets are going up, it's really hard to tell how much risk you're taking, because nothing's going down. But when we get an event like this, that's when all the warts start to show, and you can really see how much risk you were taking. So I think now is a great time. Assess how much risk you were taking. Is it right? Is it wrong? Look at your time horizon. Put that plan together. And then when these events happen, I don't want to say autopilot, because you don't want to sit and forget too much, but the rules are already in place. You're just following the plan at that point. You're not so much worrying about the day-to-day movements. So with that, we're right at 10 o'clock. Are there any other questions that we needed to go over? Okay. So what I would tell people is, if you have questions, I'm not sure, we're kind of doing the topic week to week here as we go, but make sure and reach out to us in the middle of the week, sometime before next Wednesday. I think we're planning on 9:30 again, and we'll make sure and try and answer those at the beginning of the live session next week. If you have more information, I think we're going to post some of these numbers on our website. That's pfaretire.com. We're going to have a little blog post that kind of talks about bull and bear markets and how long they go and things like that. But other than that, we appreciate everyone tuning in. And
yeah, and if you have topics you want us to talk about, let us know. Otherwise, we'll just make something up and talk to you. So, so if you want something more interesting, you need to let us know what you want to hear. So, we'll see you next week, 9:30.